As artificial intelligence continues to take the market by storm, my next guest says investors should continue to have exposure to the most important secular growth themes in the economy today, including AI, cloud, digital advertising, chips, and e-commerce. Joining me now, Albion Financial Group Chief Investment Officer Jason Ware. Jason, welcome. How can investors
Good to be with you, Lauren.
Stay ahead of the trends, because the trends are constantly changing? Who can keep up and make money in these areas if what's new one day is old like 24 hours later?
Well, that's a great question, and it actually strikes at the heart of the notion of owning secular growth, because the idea around secular growth is that it's structural, that it's enduring, that these are long wave trends with great earnings visibility. For example, you mentioned a couple of them: AI, cloud, autonomous driving or AVs, chips, digital advertising, e-commerce. These are all things that are defining the consumer and business experience in the 21st century. And there might be some movement around the growth rates over the short run based on what's happening in the economy, based on what's happening in the industry. But generally, we know the direction of travel is up, it's durable, and you want to own these names.
Okay. The sneaker company Allbirds, they're the latest in a long line of businesses shifting their model to AI. Smart business decision, or does this just say the space, now a sneaker company, totally in? Is it just overcrowded?
It's one of the weirdest pivots I've seen, and I've been doing this almost 20 years. Look, I mean, this was just to put it bluntly, it was a failing shoe company. And maybe because they were popular among the Silicon Valley crowd, that they feel like they have the chops to now become a GPU as a service company. But I think what it says about the market in general, and by the way, you can put me in the highly skeptical camp on this one, but I think what it demonstrates is that people still want to own, AI, even if it's just by name only. We've seen it over so many periods. In the late 90s, it was if you put .com on your name, you got a pop in the stock market. It was happening with cloud in the 2010s and even crypto. A lot of companies rebranded to crypto to get a pop in the market. And I think this is no different. History shows that usually these types of massive moves, simply because of a pivot and a name change, don't end well. So buyer beware.
Speaking of much more well-known names, there, I got it. You say certain ones in the Magnificent Seven got, quote, stupid cheap due to short-term noise. We're looking at 4: Microsoft, Meta, NVIDIA, and Amazon. Did you buy any of them on the discount is my first question. And second, should we have bought these names last week, because Microsoft is up 15% this week, and they're all up around, 6 to 10% on the week, with Microsoft being even more?
Yeah, they've all bounced. We didn't add to them because we have full positions. We didn't sell anything, so we didn't need to add. But I think for folks who don't own them or are underweight the names, who have fresh money to put to work, obviously the bottom in late March was great because, as noted, the quote unquote stupid cheap levels really is another way of saying that they were at trough PE multiples. I mean, we had Amazon trading at 25 times earnings. We had Meta trading at 15 times earnings. We had Microsoft at 16, 17 times earnings. NVIDIA had a sub 20 PE multiple. And yet these are the strongest growth companies, some of the strongest growth companies in the markets, with wide economic moats, and the valuation relative to the growth and opportunity just did not make sense. And so that's why we called them stupid cheap. They've since bounced, as you've noted. We have the Mag 7 as a group up 21% off the bottom. The S&P's up 13, so they're outperforming over the last many days. NASDAQ is up 13 straight days. Can you still buy them here? I think if you have a 1, 3, 5 year view, the short answer there is yes.
Okay. Are you seeing any specific opportunities outside of those names, outside of the mega cap tech and AI names?
Yeah, I mean, there's some AI adjacent names, like we like Quanta Services. I've been on this program talking about Quanta, tickers PWR, for some time. We still think that's a great play on basically building out the grid here in this country. After 20 years of not investing in the grid, we have a strong tailwind there. Outside of that, we have select names in financials that we like. We recently bought Citigroup. I think I was on your program in January talking about that. And look, when you look at bank earnings that we've seen over the last week or so, Citigroup was actually the standout report. Jane Fraser's doing a great job turning that business around. We're seeing growth reaccelerate. They had the best loan growth of the large bank group of their peers. And so we still like Citigroup. And then in the consumer space, we own Pepsi. We bought Pepsi recently, and they had a good quarter yesterday. We're starting to see things really click there in terms of volume growth. Their pricing strategies working. So yes, there are definitely areas outside of AI. I think a lot of people are calling it Halo right now. That's high assets, low obsolescence. And you can definitely build a portfolio using that barbell approach.
What does it stand for again? Halo?
I think it's a high assets, heavy assets, low obsolescence. Sorry, heavy assets, low obsolescence. It's basically the idea, and it's Josh Brown from Ritholtz Wealth Management put it out there a few weeks ago. And basically the idea is that you want to own companies that you can't use LLM to suddenly like disrupt, like physical stuff. And I think Pepsi certainly fits in that
large language model.
Large language model. You can't go to ChatGPT and say,
TGIF.
you cannot go to ChatGPT or Claude and say, make me a Pepsi, and it's going to produce one. So yeah.
Not yet. Jason, good to see you. As I said,
Yep, thank you.
TGIF. There's another one for you.